Welcome to this month's edition of The Big Picture. Apologize for being a little crude with the video this month. I'm actually out of town at a conference I have to speak at this weekend and didn't want to wait too long to get this video to you. So I went ahead and I'm doing it on my laptop, so my intro and a few things might be a little choppy, but I did want to get the information to you. This month was a very volatile month. It's been a while. We have not seen this probably since 2008. Up and down of the market, or mostly down of the market. As you can see the chart here on the screen, this is the S&P 500, and where my cursor is here, this is where it started in October, and it went all the way down almost 10%, 9.9%, and came all the way back up and ended right about right here for November 1st. So it's up a couple of percentage points for the month, and I think it was a good rebound, a good recovery. And as we'll see in the charts a minute ago, it actually stopped right where it should have from a support standpoint. Doesn't mean it'll do it every time, but we'll look at that in just a minute. I just want to show you this big V and how up and down it was. But we are continuing on upwards, and the market still is pretty strong. It's very, very big recovery, which is a good sign. We'll look at a couple of things I'll tell you that I might be a little concerned with. It's not overly concerned, but just something I want to watch. First chart here, as I usually show, is most of the indexes that I do watch. Gives us an idea of what the market has done. This is actually for September through October, so this is all the month of October. The first red bar, as I usually do, is the S&P 500 was up 2.36 for October. The Dow Jones up 2.08. The cubes, which we call the 100 top index stocks, internet stocks, it was up 2.6%. The rest of the world outside the United States was barely up 2.2%. And the moderate, I call a middle of the road type portfolio, was up about 1.4 for the month. And bonds were up about 1%. So even with that volatility, bonds actually did pretty good for the month. That tells me that people are still looking to protect their portfolios, that they're still buying bonds pretty heavily. So they're not too sure if this is going to continue. So when you see everything up like that, that usually gives you a sign. Some people are very, cautious, and some are going more for a risk. And then the next chart is, again, as I usually do, this is year to date, December 30th through October 31st. And as we run through them, the S&P 500 is up 11% year to date. The Dow Jones is up 7.16. The internet stocks are up 17.37. This is a new one I've never shown before, but I do want to put it here. This is called the New York Stock Exchange. This is an index. I do follow it. I have not shown it before. What it is, it gives me more of a proxy because I'm looking at the Dow Jones and the S&P specifically up quite high compared to almost every other index. So by themselves, that's a good sign. And we do invest there, but I was just checking to see if the rest of the stocks out there are following these two indexes. And as you can see, the New York Stock Exchange, which is thousands upon thousands of stocks, the world's largest stock exchange is the NYSE, and it's up 4.7% year to date. And that is what I'm showing to kind of give an illustration that not everything is rising quite as fast as the S&P 500 or the internet stocks. As you can see, the next bar is the international stocks without the United States, and it's barely breaking even year to date. And then the middle of the road portfolio up 4.4, which is pretty good. And bonds is still doing well and up 5.05. So everything's pretty much on this right side where I would expect it. These two, I'm not sure, or these three, I'm not sure if I would call that outliers or if it's something we kind of need to watch. I do have investments there for our clients, and if you are invested there and you're not a client, actually been a pretty good place to be. The problem I do mention often is that when you see these things shooting up like 17% for the year, you have to kind of pay attention to these things pretty tight if you're investing for yourself, because if it can go up 17%, it can drop that quick. And last month was a very good example. This index right here went down and came back up pretty quick. It was very, very volatile year. Volatile month. Next chart I want to take a look at, and this is something I show pretty often. It's the point and figure chart of the S&P 500. And as I've shown you many a times, that blue bar is what we call support. When it goes below the blue bar, and I have that on there, it's all done by the computer. It tells us where the long-term support for the market is. When it goes below that, we have to get very, very cautious and make some adjustments. And one thing that concerned me earlier in the month is that we had a breakdown right here about 1930, and the market just fell straight all the way to 1830, but it held support, bounced right back up, as you could see, and we started putting X's, and we're hitting new highs. So there was not much change that need to be made on the portfolio, or the portfolios in general. So we just wrote it down and kind of wrote it back up. But a good middle of the road portfolio, didn't really get hurt too bad throughout the month, even watching it go down. Now I have some more active portfolios, and we actually got out of those portfolios here when we had the breakdown of the 3 O's, and then when we had a break up back up of 3X's, it got right back in again. So we do have some active things that can take advantage of this up and down, but the average investor is not looking to get in and out too quickly, and this shows that the market held support and is now moving to new highs. Now, how does that look on a long-term chart? This is a monthly chart. That was a daily chart before, and I've shown this in as well. This goes from the year 2000. Again, the big dip 2000, big dip 2008, and we've been moving up. And we pulled back as the other chart showed, and we hit support right here where you could see that X top is here, and we reversed right back up with the X's and hitting new highs. This chart, and I've said it a few times, is that I'm just worried about we're being that far ahead of this, above this blue line. We're gonna have to watch that over the next year or two. We will probably see, I don't know if we'll ever test it for years, but we will probably see it pull back somewhere in this range somewhere in the next year or two, I would think, because we just can't sustain this type of move up. A lot of people thought this dip in October was it, but as I mentioned just a second ago, we didn't break that blue line, so that tells me it was not it. So we just held tight and it recovered. Everything kind of bounced right back up again. And this is, again, the chart I showed initially. This is that big V right there. And it is a powerful move down and powerful move back up. So this is going to be a short video. I just wanted to give you an update and let you know that everything's back on track. I do believe that we are going to probably make some new highs and continue on. We are in what's called a favorable period of the market. It starts in middle of October roughly and goes all the way until March, April. As a history as a guide, that's usually been a pretty good time in the market. That doesn't mean it always works that way, but you usually have some tailwind to the market that kind of allows it to want to go higher. But we'll kind of watch it very closely, and if I see anything, I definitely will put out an update. As I mentioned, I wanted to kind of just give this to you. I apologize if it's a little choppy, but I wanted to make sure that you got it before too much down the road. As always, if you have any questions or comments, put your comments below or just pop me an email, and I'll be glad to respond to them. I do that to all emails and all comments. Thank you, and have a good week.